Welcome to another Forex Friday. All right, let's just jump into it. So I wanted to start things off talking about the DXY, but I also wanted to bring up let me switch over here, an important point about the DXY. I've talked about this a lot before, and that is the weightings. So DXY is basically a proxy for the euro.
Say what?
It's like 55 to 60% of the weighting. So if you're looking at the DXY, you might as well be looking at the euro. And then the next most important one is the yen, which is like, I don't call it 10% or something. And then GBP, that's like 5%. But basically, it's not really that representative of all the other currencies. And so I wanted to bring up these two right here. So this top one is the trade-weighted US dollar index. So rather than having it be like 55% of euro, it's based on our biggest trading partners. And the Eurozone actually is the biggest, so because it's all the different countries, so technically is the largest weighting still, but it's not 60%, it's like 18%. And actually, I have a little picture right here I can show. So this is the trade-weighted index for 2022. It gets changed every year, so the weighting will adjust. But for the most part, you can rely on these, like the first, second, third, fourth people, or the weights, being the same. So right here, the euro area is about 20%, 19.5% of the trade-weighted index. And then you have China, 14.7, Mexico, 13.2, Canada, 12, basically 13, and so on. And so this is a more representative index. It's not perfect. No index really is.
Totally.
But it's pretty good. It's a lot better and, like I said, more representative than the dollar index. So I think it's helpful to use that, and that is why I'm going to be talking about it today, because you can actually pull this up on TradingView. That's what this is right here. And it's actually, I mean, no surprise, pretty freaking correlated to the DXY. I'll actually pull up the comparison chart. So as you can see, it's pretty much, I mean, not exactly, but close to a one-to-one correlation. You can see, though, this recent move is largely because of euro weakness, like excessive euro weakness relative to other currencies, and that's probably why the DXY in blue is pushing so much further than the trade-weighted index. But this can be helpful for giving you context, especially because a lot of people point to the DXY in a macro sense as indicating a dollar shortage or people fleeing dollars, when you're really just talking about the euro. And so if you're looking at the trade weighted index and seeing that move higher, that can be indicative of a larger move into the dollar from all these different countries. And then you also have the trade weighted index, the inflation adjusted trade weighted index. And this one usually recently it's been surging even farther because it has to account for inflation. But bottom line, just focus on these two, not just the DXY, because I think a lot of people give the DXY a little bit too much credit for being representative of dollar strength. I'm still going to talk about it today.
You're a fucking idiot.
Just because it is more important, just because everybody else talks about it. And also, these charts don't go below the daily, so it's not as fun to talk about in terms of price action. But anyway, with that said, let's get into the DXY. Let me get rid of this stupid comparison. All right, so no surprise, you can see this DXY has been on a tear recently, and like I mentioned, it's mostly because of euro weakness. And we have, so let's just start charting this up. So we have this high right here, where it looks like we're definitely going to be attacking that, because let's not forget, we are absolutely in a broader uptrend, and there's no reason to assume that that trend is broken, especially now. So we recently came off this level right here. So we dipped into this previous range. This large red candle was when the inflation print in the United States surprised to the downside. But that was pretty short-lived, and then people realized that the euro was in more trouble, and that interest rate differential that might stem from the weaker inflation print was really not that much to write home about.
Totally.
But anyway, we dipped into this previous range, and now we're pushing higher, and like I said, presumably going to head to the range high. Now, this is a troubling area to chase, especially because we're in like a little past the midpoint, I think. Let me get my ruler. Come on, ruler. That's not a ruler. Let's do it. So we're about, yeah, past the midpoint. Now, I guess we can actually map that out. Now, you could be looking for some sort of pullback below the midpoint, and then a reclaim, retest, and then a shoot higher to eventually test this range high. That's definitely a reasonable trade, but this is mostly no man's land. The play was down here once it reclaimed this level. And I did talk about that last week, that this was kind of the make or break spot. I mean, it pushed pretty quickly, so hard to catch, but it went right into this demand level. I mean, I usually play off of these range levels anyway, because price likes to make a new range, dip back, retest the previous range to confirm it, and then come back in. And it did line up well with, if we go down to the 4-hour chart, you can probably see a little bit better, with this area of demand right here, because this is where the big impulse started, right? A lot of imbalance to fill. So we came back in, dipped a little below, but eventually pulled liquidity from that demand zone and pushed back higher. So I would expect dollar strength to continue, especially in the DXY, because I expect euro weakness more than anything. I would still say in these other index, like the trade-weighted ones, that we're probably going to continue to see dollar strength. Woo! But maybe not quite to the same extent as the DXY, because the euro will probably be one of the weaker currencies in the basket, right?
Yep.
Okay. So that's a basic overview of DXY, but now let's talk about the elephant in the room, Euro USD. So I actually have this little chart right here that I created, because this is a perfect example of just, I don't know, it's called a price, you know, like a lot of people, they have their little examples of like an ascending triangle and the bull flag, and those patterns are completely outdated. Like that's what retail traders use to lose money. Like if you want to lose money, follow those trading patterns. And so trading really has to evolve. It has to evolve. And this is a good, you know, it's more complicated. That's kind of the reason of, or the purpose of evolving. It just ends up becoming more complicated in terms of patterns that you need to recognize. But this is a good one that I like to use. And it just happened to be perfect. This, or the Euro USD right now, happened to be a perfect example of this pattern. So I created it, and this is just the line version you can see of this. And then I broke it down into phases. So what let me just talk about this, and then we can talk about maybe the future of the euro. Quick story. I think it's going to go back below parity, though. But let's just talk about how it relates to this price chart example that I laid out right here. So we have a range that you can see we created. It's a little bit, I mean, let me actually switch back to the candles. Okay, so we rallied up, established a range, right? We made, you could actually even push this down like that. And this right there. So we rallied up, we made a high, and we had a low right here that kind of established this range. And then we broke to the downside to kind of pull liquidity. Then we broke to the upside to pull liquidity again. And now, and then we had some chop. And then we expanded the range one more time to pull more liquidity. This was a little bit more aggressive than normal. Again, this had to do with the inflation print in the U.S. surprising to the downside and the euro rallying as a result. So this was kind of a catalyst-driven excessive expansion, but still consistent with this overall strategy or this layout. And then we ended up returning back down a quick trickle. So this, quick trickle doesn't really make sense, but a quick drop all the way down, kind of staircasey, because this drop doesn't usually give you the opportunity to get that retest. You know, the retail traders that are always looking for that retest, and they don't ever get that opportunity because this last part, the drop after the expansion, usually drops pretty aggressively.
And we say bye-bye.
So we can go back to this right here. It's a little bit clearer because the candles can be somewhat messy. But yeah, so step one, phase one, which is in the green right here. All right, oop, maybe I'll just zoom into this. That doesn't work. There we go. Let's get this nice and big.
That's what she said.
Okay, so phase one, you establish a range. And that can be off of this impulse right here. So you establish a range, you got a low, you got a high, and then you break the range at both the top and the bottom. Doesn't necessarily matter which order, but in this case it was the bottom and then the top. So you expand the range. And this is a way to pull liquidity, kind of trick retail traders into hopping in on the downside and then tricking them to hop in on the upside. And so then after that, you get a little bit of chop. So you break the range and then go back to kind of just meaningless price action that screws retailers. Like there is no trade really to be made unless you're like really low time frame focused or something. And then you expand in phase three expand the range one more time. And then phase four, you return back to that range low. And then phase five, it can vary. Oftentimes you see it break below the range for kind of like what Euro USD is doing right now. And maybe get a slight retest of like the very, very bottom. Never really up. Well, sometimes up here. I shouldn't say never, but usually it's kind of like this part right here. It doesn't usually give traders the opportunity to hop in on the downside trade on the retest. So it'll be a very slight pullback and then a continuation. Or it comes all the way back to this midpoint. Maybe bounces off the range low and then continues again. I purposely left this open because the phase 5 can vary a little bit more. It really depends on context and maybe like the macro outlook, which direction the trend is actually going to go, because it could just be another excessive expansion kind of like this and then a continuation up to the upside. But either way, this pattern you will see all the time. And so it's good to kind of get that in your memory. Just solidify this. Take a mental picture of that.
Yep.
Because that is what we're seeing right now. I'll go ahead and get rid of this. Let's get back to the candles. So that is what we're seeing right now. And so this is what I'm talking about. So this is kind of the retail trade right here. You would be looking for this retest that never happens. So you don't usually get a trickle up. It doesn't give you the opportunity to hop in on that trade. And that's usually this whole move down until you start chasing maybe down here, and then you get the corrective move all the way back up. So I wouldn't be looking to hop in on the short yet, especially heading into this demand area around parity. It's very possible that Euro USD gets one more bid. Get rid of this. One more bid back up to this level before actually tanking and headed well below the parity level. I wouldn't be surprised. So the move is over, but I really wanted to talk about this because this is a move like I said, you can really see in every asset, every market. This happens so much. You establish a range, you expand the range, you chop, and then you expand the range a little bit further just to really trick people that the trend's trading, and then you just go all the way south, or if it's reversed, all the way up. Right?
Yep.
So that's what I'm expecting the euro to continue going down, but like I said, I wouldn't be surprised if we saw some little bid caught off at this level and a retracement up to maybe around the range low. Hard to say if Euro USD has the appetite to get all the way up here to the midpoint, because like I do like, I would love to short if Euro got all the way up to here in this mid level, especially if it pulled liquidity from this high. I would love that as a shorting opportunity. I think that would be pretty ideal. I don't know if I see the euro getting that high, just in the current environment, especially with the momentum that's now kicking in. But I wouldn't be surprised if we saw a little bit of a pullback, maybe closer to this range low before continuing down below parity. But yeah, that is Euro USD. So let's transition to USD Jpy. Oops. One more time. Okay. Maybe go to the daily real quick. So this is another market where we're clearly in an uptrend. There's really no reason to believe that we're headed lower longer term until it kind of proves to us that it is wanting to go down lower.
That's what she said.
So the level I would look for is this blue dashed line. We'll actually switch that to a nice solid line. Oh, whoops. There we go. Okay. So this is the high, and we have this uptrend right here. Clear uptrend. And we just bounced pretty perfectly off this range, right? What I talk about with the DXY. This is very common. You see price have a range, break the range, make a new high, and then it comes back to test that range right here. I mean, this is textbook. It was perfect, right? This spot right there. So pulls liquidity from the previous range, confirms that it's ready to leave that, and then heads higher to a new high. Now, if it is going to make a new high, that would be the target, right? So, and again, this is looking into the past, so hindsight's 2020. Forgive me, but I'm trying to teach here. So this would be the trade. If you were, looking at this and saying, okay, well, the trend hasn't been broken, it's still uptrend. Where is the price likely going to pivot from? We have this level right here, the range, the previous range high. I usually use candle bodies rather than wicks, especially because wicks can get out of hand. They'll be like all the way up here sometimes. So I usually use candle bodies, and this is a good example of that working. But you enter right at the top of that candle body, and you target a new high. And I like to get at least a 3 risk to reward. So my minimum would be 3. So I would just drag my stop up until that level, and I mean, you wouldn't have even really experienced that much drawdown, and I would say it's likely going to end up ticking or hitting that top. If not, it'll probably pull liquidity from this area. Say the trend is to reverse. That would mean it's not going to make a higher high, and so we would likely pull liquidity from supply up in this general region. For that reason, I wouldn't necessarily be a buyer right now of USD JPY, at least in the short term. I think we could see a potential pullback. Let me get to the 4-hour chart. I think we could easily see a pullback around to, call it this level right here, right? This was kind of a previous range. So we're getting fractal here. We're talking about these larger ranges right here where it pulled liquidity. See this perfect little dip right here. And now we pushed higher, and we have this other range right here. So I wouldn't be surprised if we saw a pullback into here to retest, pull liquidity, and then we continue higher to this level right here, the actual high or the swing high. So I would be eyeing some sort of pullback into this zone if possible. I wouldn't personally chase price this at this level, even though we totally could see a spike all the way up to the high. I think we will probably see, even if it does go all the way up there, I think we will probably see at least one more pullback before like the real impulse higher, if there is to be one, happens. Because this is already pretty aggressive, and look, if like I said, we could definitely just shoot straight up and then kind of pull back and then head higher. Either option I would be looking for some sort of pullback to enter on, whether it's like that or from up here into this area before continuation. Either one, doesn't really matter. But that's what I'd be looking at for USD JPY.
My man.
And again, these plays are the best to look for. These are my favorite. You get these expansions or these new trends that are created that create a whole new range, and then price comes all the way down into that previous range, dips in, pulls liquidity, and then pushes higher. Those are some of the best risk to reward trades out there, and I mean, I feel.
Totally.
But yeah, that is USD JPY. All right, let's transition to, what's our next one? USD, and the Yuan. So this is the US dollar and Chinese yuan. Now, this would be, this potential play right here would be shorting the dollar. So keep that in mind. If you are, your macro bias is, I'm not shorting the dollar at all. But, if everybody's thinking that, it might be a good time to short the dollar in the short term, especially on a pullback. And that would be consistent with, going back to USD JPY, we see a pullback just like this right here. So if we saw that, if we saw that pullback, that could line up nicely with this pullback of this of USD CNH. So we have this range, right? And we are expanding, potentially going to bust through that swing high, And what I would want to see, I mean, you could just play the range deviation. I don't know if I would want to do that just given the macro forces driving USD right now, or the dollar, I should say. Because a lot of times I'll take these plays just have a sizable distance between the range high and where my entry is, and just try to get like a little pull, even if it like pushes up and consolidates a little bit. If you have your entry pretty high, you're just trying to get lucky a little bit, and you're not at risk of being in that much drawdown unless the trend really goes against you, in which case it's pretty obvious that the trade is invalidated. But I would look to see, so we have this swing. Actually, let me get these arrows out of the way. Get the fuck out of here. Okay, so we could see a push above, and then I would want to see possibly that be just a wick, or even if we do close a little bit up here, I want to see a close back below this range high, and then you can look for the retest and a push down. I would only target the midpoint just given the dollar strength, but you could target the range low, at least have that as a second target. So what that would look like, something like that. And the stop, the invalidation, would just be wherever the high is. So let me see if I can get rid of this stuff. Or that too. That's cool. So target the midpoint, like I said, entry, whoops, at the range high. And not now. Again, this is not entering now. This would be, Jesus, why is this so big? Entering on a retest of that level. So you push up here, you let price do whatever it's trying to do. If it continues further, you're fine. Your stop doesn't get hit because you're not in the trade. That's kind of the point. You want to wait for price to confirm for you. So you bust below or bust above, and maybe it's a wick. Ideally, I would love to see a wick, and then you see all the liquidity come in and push that candle close right below that. If you saw that, then I would enter. So okay, come on. So kind of like what this looks like right now, but on a larger scale. So if you saw a big, maybe a higher time frame candle, maybe even a daily, hard to say. Yeah, I don't know. I might wait for one more, hard to say, but kind of this idea, because this wick is a little bit small. I'd want to see a larger reaction where you see price push all the way here, and then maybe the candle close still pushes to close below this range high. Kind of like this little candle right here, but with a much larger wick to show that there really is selling pressure. And then I would have the entry on the retest, the invalidation stop right above wherever that wick high was, and then target the midpoint. Because I don't think if we do see a retracement, just a small retracement, I don't think it'll be very long-lived. I want to say the dollar is going to continue much higher against the Chinese yuan, especially considering China recently cut rates. So that interest rate differential with the US raising rates is only going to add to the strength, at least the dollar against the yuan.
Right.
So for that reason, I would probably try to target the midpoint. I don't have confidence that it would get all the way down here. But anyway, so more or less that's what I'm thinking about this one. This isn't a super high conviction trade. I probably won't be taking this just because I don't really, I don't know. I'd rather focus on the higher conviction ones, keep it simple. All right, transitioning. Okay, what is this? This is, I'm learning with you guys, don't worry. Sometimes I forget what I even had to this. So we got the Swiss franc and the Japanese yen. Okay. What is it? Oh, I talked about this before. Yeah, so this trade actually, I mean, I'll be completely transparent. I talked about this. I didn't take it, but I talked about it as a good example. Whoops. That's not what I wanted. Because it was a break of structure, right? So we had, and I guess you could say that the structure was really down here because, look, we got another textbook dip into this range. I mean, almost hit it to a T, like perfectly. That's actually pretty crazy.
Not crazy.
So this is the tricky part about identifying structure. Is sometimes you see, so you see this uptrend pretty clear, right? So we have a low, a high, a higher low, higher high, higher low, higher high, higher low, lower high, and then a lower low. And so you could consider this a break of structure, which is what I was looking for and why I think it was a good example to demonstrate that concept. But when you have a lot of higher lows and whatever, just like this longer uptrend, sometimes identifying the actual break of structure isn't obvious. Is it this one or is it this one? In this case, because we're making a new high, it seems that this was really the break of structure level to be looking at, where if price dipped below here, then we would be looking for a pullback up and an opportunity to short it after dumping into supply. But still, I think it was still a good trade idea, just given that it was a break of structure. We had this lower high, and then we made a lower low, breaking below, and then we would be looking into some sort of supply zone like this for price to enter and push back down to a lower low, which I guess would probably be around here, but at least here. But obviously that didn't happen. It looks like we are headed higher, so we're still in this uptrend. So given that, we would want to be looking for some, here, let's go to the 3-day maybe. So what are our levels for buying if this does continue higher? Let me get rid of all this nonsense. So we have the high right here that we're presumably going to break, right? And then we have these candle bodies that can kind of represent a good level we want to stay above. So what I would be looking at is price to continue higher, bust above this high for a new high, right? Because that would also confirm that we are in an uptrend, making higher highs, and then headed for a higher low, and then eventually another higher high. So we push above, break this high, confirm that we are continuing this uptrend, and then we're going to be looking for some sort of pullback into a demand level to hop in on a potential long. And so what is that level? I would say this is a good level to watch out for right here. You can tell this level kind of is a range in and of itself where a lot of liquidity entered the market. This was resistance. We cleared above it now, so we would hope to use it as support.
Yep.
But you could also look to maybe this right here. Hard to say. I don't think that you'd see that much of a retracement. If it gets there, definitely a possibility to consider as a long. Get our colors right here. So we could see price come all the way down into here before pushing back up, but something tells me that is not what will happen. We'll see price probably push higher up somewhere in this region and then pull back, maybe even to this level, just to dip into this previous high, the previous range. But I would also be looking at this level just because of these, and these are 3-day candle closes. We can even go to the weekly and see. Yeah, level isn't quite as accurate there. Whoops. You can even push it down there because weekly levels are pretty strong. Another recommendation when you're looking at trades is have key levels for weekly candles mapped out, because closes above and below that can be can be a big deal. They can have serious implications. They can be like, okay, well, if it can't close above that weekly level, then it's probably headed lower or whatever it is. All right, so we got these levels, right? Can I get rid of this? Why does it do that? Whatever. You know where the levels are.
Come on, man.
So yeah, that's what I would be looking for. Price to push up higher like that, and then maybe come dip back into this range anywhere around these candle body highs, or I guess really anywhere in this range. And those are my beautiful air. Okay, let's just not.
You're a fucking idiot.
Okay, yeah. Well, my drawing skills seem to be falling off, so we'll go ahead and transition. But yeah, that's what I'd be looking for, because this is a range right here. So we're looking for a dip back or push above it, and then a dip back below to confirm that leaving this range is accepted by the market, and we're ready to push higher. All right.
Yep.
Okay. Last pair. And this one is Euro AUD. Let's find out together why I added this to the list. You know what? It's the last one. We will start fresh. Fresh eyes. Okay, so we're on the daily chart. So let's just start off bare bones in it. So clear downtrend, right? And this is potentially our, call it swing high. Let's map this level out. And then we also have this as a range. Right here, this is roughly a range that we're trading in right now. So we would want to see price hold this level. And if it did, we could reasonably assume that it would push up to this level right here. So if it holds right here, we could expect it to push higher up until this range high, or that part of the range high. And just for shits and gigs, we'll map out this. So this is the other range. So if price were to consolidate like this, close below, look for the retest, and short it to the bottom, right? But if it were the opposite, you got something like this, close above, retest, push to the top. You're just playing the ranges, right? Keep it simple, stupid.
Yep.
And let's drop down to the 4-hour chart. Okay, yeah. So you can tell that we are definitely using this level right now as support. This would be a key level to watch. If we, again, if you see it close, start closing below, like a candle close below, the top of the candle being literally below this line, or obviously, I'm sure everyone can figure that out. Then I'd be looking for the pullback for the short. Where's our... And then you can have your stop just above these highs, these kind of shorter term swing highs, and then target a new low. Now, let's get the retest. Do we get 3? Perfect. Perfect 3. So that's what I'd be looking for if we saw a close below here. Try to get that retest. And even if it comes into here, just let it ride. Because if you get closes, at least one, I would probably, what is it, the 4-hour chart? I would say like a full candle close, bare minimum. You see a full candle close below this level. And if you see 2, definitely. Even if it comes down here, you might see this and then the push down. So I would still leave the order there. Again, not financial advice.
Little bitch.
And can we get rid of you? All right, but what is this? Euro AUD, and again, that would actually make sense because we are in this downtrend, and actually, so it looks like we could have been pulling liquidity from here. Now this is a little messy in terms of identifying highs and lows, but you know, clear high right here, and you kind of have a low, kind of have a high, another low. That was before high. A low, lower high, and then you clearly made a low here, and this is now a lower high that pretty much pulled liquidity from, yeah, this area right here. Oops, a little lower, I guess. Yeah, call it from this area. So it's very possible that that was the high, right? That was the lower high, and we are headed to make a lower low. So I don't know if I'd have that much confidence in taking a trade long. But it certainly is possible. You're going against a longer term trend, which I don't recommend. But still, like I said, possibility, and you would just target a new high. You can just target here in case it really wants to make sure it pulls all the liquidity from this level. But yeah, I would say don't usually trade against the trend because this is close enough to the top where I would say this is probably the liquidity zone. I mean the supply zone. Supply zone that price dipped into, pulled from, and now we are probably going to be taking a nice drop down below to make a new lower low.
My man.
But yeah, that is, I guess, all I have for you today. Aww. But appreciate you watching. Hope that helped. Hope you learned something. And as always, stay happy, humble, and most importantly, solvent.
My man.
And I'll catch you all next week.
And we say bye bye.